And with that, it's my great pleasure to introduce our keynote speaker, who will explore how Asia is stepping up to build a connected, decarbonised region. Please welcome Mr. Low Xin Wei, the Assistant Chief Executive for the Markets and Systems Division of the Singapore Energy Market Authority, to the stage.
Wow, this is a very good crowd. Good morning, distinguished guests, esteemed colleagues, ladies and gentlemen. It's an honor to join you today at the Climate Group Asia Action Summit. We are meeting at a time of great global political and economic uncertainty. When jobs and supply chain security are at stake, it is not unreasonable to see climate action take a back seat. A clear commitment from Asian countries is hence critical. We are home to over half the world's population and account for nearly 45% of global emissions. At the same time, our region faces the greatest risk from climate change. The way in which Asia sources for our energy, whether from fossil fuels or renewables, and how we decarbonize will shape not only our own trajectory, but that of the entire world. It is heartening to hear across the last 3 days of Ecosperity Week, which I think a lot of you here would have attended multiple sessions, that the trajectory and commitment from Asia is strong. Renewable energy already makes up a significant share of the energy mix in Asia and is supported by falling costs. Wind and solar capacity in China has already exceeded fossil fuel-based thermal power generation for the first time in March this year. Even in Southeast Asia, we are seeing renewable energy costs comparable to or lower than that of coal-generated energy. Despite all this, I think more can be done in Southeast Asia. I highly recommend reading the excellent op-ed written by Dr. Fatih Birol from the IEA, published in the Straits Times this morning, on his call to action, for Southeast Asian countries. And most international surveys agree that Southeast Asia as a region, we have immense renewable potential, yet only a small fraction of this potential is tapped. Allow me to speak on 3 critical levers we must urgently pull: connectivity, capital, and collaboration to build a decarbonized, inclusive energy future for Southeast Asia. Most of Southeast Asia, as if you could just take a look at the map, is archipelagic. I mean, it's all separated by waters. A lot of them are islands. In fact, the largest country in Southeast Asia by far, which is Indonesia, is located, a bunch of islands spread out over an area, almost the size of Europe. Or it's highly forested, where it's connected into landmass. And this results in very poor grid connectivity and prevents clean energy from reaching where it's most needed. Within ASEAN, members have been working closely to advance our shared vision of an ASEAN Power Grid. With the push for decarbonization, there's been a renewed interest. We recently launched the second phase of the Lao PDR, Thailand, Malaysia, Singapore Power Integration Project, which would see up to 200 megawatts of electricity being traded between 4 countries. I mean, this idea of ASEAN Power Grid has been around for 30 years, but why the sudden interest? I think the point here to note is that in the past, when every country could more or less access the same gas turbine, from the same fuel manufacturers across the world and source for fuels at more or less the same price points, there is very limited, upside to trading across borders when the transmission cost sometimes, is going to be fairly expensive. There's no point in trading electricity then. But with renewable energy, the equation is slightly different. It may very well be cheaper in many cases to connect urban centers to nearby renewable sources, but they just don't happen to be within its own borders. Countries would be able to construct a more reliable and cheaper renewable portfolio from across the region than if it were to rely on renewable sources within its own borders. I mean, it's not just a hypothetical point I'm making. We just need to look at Europe and ask, could they have come so far in their decarbonization journey without energy market and grid integration? Cross-border interconnectors have enabled countries like Denmark to be able to export surplus wind, while Germany and in the Netherlands benefit from balancing the variability from a lot of their wind and solar projects with Nordic hydro. Similarly, the gains to Southeast Asia, if electricity trade were to take off, are not going to be trivial. According to the Southeast Asia Green Economy 2025 report launched on Monday by Bain and Temasek, regional interconnection could reduce the energy transition cost here by nearly $1 trillion. compared to if countries took an individual approach to decarbonization. There are also numerous social economic benefits to be had from cross-border electricity trading. Up to 9,000 jobs could be created annually, and Southeast Asia as a region could see an uplift in its GDP by up to 5%, according to the US-Singapore feasibility study on regional energy connectivity. We need to continue with concrete small steps to make the ASEAN Power Grid a reality, starting with bilateral projects. Low-hanging fruits will be those which make use of existing interconnectors like the Laos, Thailand, Singapore, Malaysia, PIP, and the recent Energem cross-border electricity sales, which saw 50 megawatts of clean energy being traded across from Malaysia to Singapore through an existing interconnector. Singapore has also issued conditional approvals to cross-border projects with our neighbours. Some, like those from Indonesia, are mere 40 kilometers from where we stand today, so not much different from many of the offshore wind projects in your country. They are powered by mature technology such as solar PV and BESS that have gone down significantly in cost in recent years. However, in enabling the physical flow of cross-border electricity, we must also recognize that companies require the corresponding energy attribute certificates for their Scope 2 accounting. The energy that comes from these islands may be green, but they may not be considered green as far as accounting goes. And that's where a key challenge arises. Major international standards, such as the Greenhouse Gas Protocol, currently do not explicitly recognize EACs from cross-border electricity trade as a valid form of renewable energy procurement outside of harmonized markets in the EU and North America. And this is a key barrier preventing corporates from signing offtake agreements with electricity importers in the region to be able to take this first step in decarbonizing the region. Second, we must look to close the financing gap. The Asian Development Bank estimates that Asia will require about US $1.7 trillion annually in climate and infrastructure investment through to 2030 to support sustainable development and decarbonization. Unfortunately, Southeast Asia faces a significant shortfall with a green investment gap of more than US $210 billion per year. How are we going to close this gap? Yesterday, there was this witty comment made by a Malaysian minister. The money is all there, but it's just lying in everyone's pocket. And it's a very realistic statement about the very high perceived risk of green investments in Southeast Asia. This risk premium leads to a higher cost of capital. Every 2% increase in the cost of capital can raise the levelized cost of electricity in our renewable energy projects by 20%, and this is just for solar and wind. In contrast, de-risk infrastructure and projects in Europe, like regulated undersea cables, can attract capital at rates of around 5%, enabling much cheaper clean energy development. But in Southeast Asia, cost of capital may well exceed 10 to 12%. For projects such as solar and wind, and they may lose out to more polluting but capital-light alternatives such as diesel or gas. Strategic de-risking, though, would have to be achieved through mechanisms like blended financing, better risk coverage, or through government providing support. And Singapore is doing its part to catalyze the scaling up of renewable power generation. We have supported partners across the entire infrastructure value chain, serving as the regional base to many international infrastructure development companies, project finance teams of global financial institutes, as well as multilateral development banks, such as the World Bank and the Asian Development Bank. We also need to mobilize the right type of capital. Blended finance instrument can bridge the risk-reward gap by using public or concessional funding to crowd in private capital. One promising model is a Singapore-based Bayfront infrastructure management platform. Bayfront issues infrastructure asset-backed securities, which essentially pools together loans from completed infrastructure projects and turns them into tradable investment products. And this helps to recycle capital back to originators and improve liquidity and risk diversification for investors. At yesterday's FAST conference, the Singapore government has announced that it will also set aside US $500 million of concessional capital into a fund called the Financing Asia's Transition Partnership Fund. alongside matching capital from other partners around the region. And this would fund marginally bankable clean energy infrastructure in Asia, which can be deemed too risky or unprofitable for investors. Singapore has also taken steps to provide clear guidance for green and transition investments in Asia. The Singapore Asia Taxonomy, the SAT, guides what's green and what's amber. So amber, that's the color code we assign for transitional activities. And in fact, recognizing transitional activities with the color amber is one of the world's first, under the Singapore Asia Taxonomy, to include transitional activities, and offers a science-based framework for credible, regionally aligned investments that reflect the realities of emerging markets such as Asia. And this allows assets such as H2-ready CCGTs to attract concessional financing. Since its launch, there has been strong interest among financial institutes and firms in adopting this taxonomy. Products have been developed based on the SAT's classifications, portfolios have been aligned with the SAT's criteria, and corporate sustainability strategies have been formulated with reference to the SAT. Another plank in de-risking projects will have to come from the insurance industry. The Monetary Authority of Singapore has anchored a number of international insurance brokers, such as Marsh, Willis Tower Watson, to provide risk analytics and advisory for physical climate risk, energy transition investments, and carbon and nature markets. So this gives, I think, a lot more a deep analysis on the risk aspects for firms to be able to make investments in green projects in the region. Singapore will support first-of-its-kind energy transition projects. Last year, Singapore established a Future Energy Fund with an initial injection of $5 billion to support infrastructure investments in projects that may involve nascent technologies or require high upfront capital expenditures and exposure to significant commercial and geopolitical risks. For example, subsea cables for low-carbon electricity trade, as well as new hydrogen terminals and pipelines, if we decide to adopt and scale up the use of hydrogen. And the Singapore government has also announced that it will add another $5 billion to the Future Energy Fund this year. That said, de-risking can only take us so far. Buyers must also step up by committing to long-term power purchase agreements. These provide revenue certainty and enable developers to secure financing at lower costs. Without them, many bankable projects will remain stuck at the starting line. Finally, on collaboration. Collaboration is the linchpin that binds connectivity and capital together. This collaboration can take on several forms. First, capacity building and knowledge sharing. Clean energy transitions are complex. They demand not just hardware and infrastructure, but also strong institutions, skilled talent, and effective policies. By exchanging best practices, technical expertise, and regulatory experience, we can accelerate progress across the region, especially in markets where the systems are still evolving. The newly established International Energy Agency, the IEA, Regional Cooperation Center in Singapore, is one such example. It's IEA's first office outside of its headquarters in Paris and will be an important node to provide tailored policy advice for the energy transition in the Asia-Pacific and beyond. Second, collaboration also means working together to decarbonize Asia's supply chain, an often overlooked area. This will be essential for companies to meet their Scope 3 targets and for countries to meet their climate pledges, since many of Asia's economies are manufacturing hubs for global industries, from steel and cement to semiconductors and consumer goods. Governments, manufacturers, financiers, and buyers must co-create transition plans for these supply chains. This would involve the mainstreaming of green procurement practices, cleaner industrial processes, and technology adoption at scale, from electrification to the making of low-carbon materials. Let me close by saying that the road to net zero will not be linear or easy. The global political climate may point to a more fragmented markets and contestation. Supply chains are being redrawn. The global leadership is in flux, giving rise to more arbitrary, protectionist, and dangerous world. But what we have heard over the past week has been strong commitment by Asian actors towards more global collaboration and staying the course. in our decarbonization journey. It is underpinned not only by conviction and optimism, but hard economics. Green technology has advanced dramatically in the last 2 decades. Technologies like wind, PV, battery energy storage systems, and EV are now mature and mainstream. What's more, the capacity for continued innovation in these industries that will allow us to further reduce its costs are firmly entrenched in Asia. After China, the largest PV manufacturers are Vietnam, Thailand, and Malaysia. Both of these mean that within Asia, we have both the will and the capabilities to continue to march forward in our transition journey. So where we are standing today, in Singapore, in Asia, the future looks bright. And I thank you all, and I wish you all a productive and inspiring summit. Thank you, everyone.